Welcome to Markets Now. I'm Michelle Roque with Scott Varilek with Kooima Kooima Varilek. Grains, well, leaning mostly lower this morning with a few exceptions in the wheat complex, while the livestock futures were higher in cattle, lower in hogs. And Scott, cattle market had a nice day yesterday. We're building on that today, but pushed by some higher cash, right?
Yes, and thanks for having me. But yes, cash was king yesterday. Started harder in the morning at some steady bids, low 180s, 183, and then we get to 184, then 185, then 186, and then even some 187 to some regionals. So we've got some great prices. Most of that was northern trade, and it felt like all of the packers were involved. I heard all of their names across the countryside buying cattle here and there. So this is your week. This week, next week, seasonal cash highs for the year, and it's performing like it should seasonally. So we're looking at some great demand coming up that the packer wants to have some cattle for. We've got grilling season coming very fast, it feels like, and they need some cattle. So they were after them. They're hard. You can find a bid for about whenever you want. I think this just all falls back on what we've been talking about for the last several years: the tighter supply, the smaller cow herd, and it's just coming to fruition now with some of these overall tighter supply, good demand coming. So they're trying to get any leverage they can, get any cattle that they can coming to their doors. So you can get a bid for the end of March, for April, for May, all these basis contracts. You can find them for the Septembers, the Novembers, that far out. I mean, they're really trying to get their hands actively on cattle. So we have some leverage if we know how to use it. And I think when you start to see markets rally like this fast, that can give producers a little bit more confidence to say, okay, I sold too early now maybe I need to do a better job of marketing because we do have some leverage. So the South hasn't traded that much yet, so maybe we have yet to hear from them today.
So we are seeing higher boxes as well, and obviously that's being pushed a little bit here by these lighter slaughter numbers yet, right?
Yeah, and I think that was one of those instances where the cattle were maybe not there, and if the packer took a big run at the cattle, they're just not going to find a bunch of numbers. So it didn't benefit them to try to raise the price to try to get more cattle. They would rather just slow their chain speed down, and then the box prices go up and they get paid that way. So it was one way for them to force the boxes a little bit higher. Highest they've ever been on the beginning of March, excluding the COVID year, because during COVID we had some astronomical prices that we're still not even close to yet for boxes. But that's what I think that game is being played. Some of that slower chain speed was just to get some of these boxes higher.
So one thing I know that you're a little cautious of right now is the weights. So we have to make sure that we keep a lid on that, just because we've got a lot of cheap corn going into these cattle right now and pretty decent weather, right?
Yeah, amen on that. We've got cattle gaining. They're doing very well. Some closeouts that are over the 4 pounds a day on some of these fat cattle. That's pretty impressive. The yard conditions are great. It's been dry, steadier temperatures. They've really rebounded from what we went through in January, and are doing very well. We got grain prices that are lower, and the weird thing is what we've had to pay for some of these feeder cattle last fall, and prices were very high. Some of these cattle, some of these closeouts don't actually make money. They're still losing some money because they had to pay too much for the feeders. So what that can in turn do with the cheap feed, we're going to try to put some extra weight on them, try to feed our way out of it, put some more pounds on it. Big cattle, big check. You hear that kind of talk. And the conditions are set for it. So yeah, weights are unchanged yesterday over the week prior levels, but still well over a year ago kind of carcass weights. So that could be the one thing that could create a problem. And I think packers want to help you make them bigger. They're okay with saying, hey, we want your cattle, but can you feed them for an extra 30 days? You do hear quite a bit of that. They want them pushed back. They're going to want the pounds. So for us, we're going to have to stay current if we're going to stay ahead of this kind of market.
Let's also talk about kind of the structure of the futures right now. I mean, obviously the funds are back in here buying, but we are actually making some contract highs in the deferred month. So you believe that that may help push the front end of the board?
I absolutely do. For me, I'm looking at the sideways range that we've been in for a month, and it's been chopping to the top side, to the downside, and threatening which side is it going to break out. And some of the deferred contracts, the December is breaking out of the top side. And that usually kind of tells me, okay, when we see some leadership from either the front or the back, the other one might follow suit. So seeing these deferreds break out of the top side of the range, you got as far out as April 25, making a contract high today.
Wow.
I think that gives quite a bit of confidence to the fronts that we can maybe try to break out of the top side of this range. Right on top of this good cash news, we've got one gap left above us in the April live cattle chart, 190.27. I think there's a lot of hedgers that have orders there. So if it can get through that big swell of orders and get that gap filled, we could maybe have some extension yet, because yes, the funds have been playing a part here. We've got some open interest that's a decent level, and they're not over long right now. They have some length, but that could maybe be that next push that we get from the funds if they see a chart breakout. So hoping that happens. Technicals look pretty good right now.
Hogs are lower, as I mentioned this morning, and April's been under pressure most of the week here as we've seen a lot of rolling and whatnot. But the back months, actually, the charts look pretty good there. We've scored some new contract highs this week, and we're just kind of consolidating under those levels, aren't we?
Yeah, the trend is your friend, and that seems to really matter with the hog market. When they do trend, they trend in a serious fashion, and it's been on the uptrend, been on the rally. It got higher than a lot of us fundamentalists thought it probably could in the hog market. And April maybe had to catch a little bit of reality here that it's getting a pretty hefty price ahead of maybe where some of the cash prices could be. So maybe a little correction there, but the summers look pretty intent to try to hang on. I think as long as they're holding some uptrends, they're going to find some strength. The April contract has quite a bit of support, volume, risk levels around that $84 mark. That's where your LRP dates line up with the CME dates. So there's going to be a lot of players that are going to be in there at 84. Then it's always interesting as we come towards the end of these contracts, how it can kind of magnet down around those levels. So $84 is the number we're looking at on April hogs. And it magically gets right down here. And that's where it kind of stops for a minute and a little bit of a holding pattern. So looking for that number is kind of some support for the April hogs.
Gotcha. Grains, nice day yesterday. We got above the 20-day moving average in the corn market. Now a lot of follow through here. So are we just taking a little breather ahead of the report coming up today? Or is this the China cancellation on wheat that we had again this morning?
Yep, China cancellation on wheat. And it's just the kind of market that, okay, we're having to talk about a China cancellation on wheat. So that's the story that we're going with, and a 20-day moving average. So that's what we have in the grain markets. You get a big rally yesterday, you get a little bit of technical movement, and you feel like, okay, maybe we could get some legs, some follow through, and it just unable to do it. It just does not have the long-term news. Some of the feeder calf guys are saying, okay, corn's higher, are the feeders going to go lower? I don't think even the feeders believe that this corn market has much legs under it. So, and that's the grain market that we have. We've got a big supply, and we have to look at that again today at 11 o'clock, get a little reminder of some ending stocks numbers. Now in general, this March report does not do much. We're not really looking at it. We already have dissected last year's numbers. We kind of have a feeling of where we're at. We're more looking ahead to acreage in the end of March. So we're still going to be chopping sideways, finding a spot to hold and chop sideways until we get some new news. So as you had alluded to earlier, it's maybe more the South American numbers that we have to find some interest in, something that could carry a little bit more weight in the market. I'm not expecting any large movements on this report today. But the little break today is a little bit disappointing that we couldn't follow through on such a strong day yesterday. So hopefully we can hold that 20-day moving average. I guess that would maybe give it a little bit of strength and maybe wiggle some of these funds out. They're short. They're not budging. We haven't seen enough news or technical breakouts for them to want to say, I need to get out of some shorts yet. So still overhanging with what they're going to do here.
No, I agree with you. All right, good stuff. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.